Welcome to TheoTrade and welcome to the TheoVideo report. My name is Don Kaufman. Here we are on December 10th, 2015, kind of in our inaugural week, if you will, of the TheoVideo report. And there is much going on. So I'm going to record this now in approximately the last 10 to 12 minutes of the trading day, specifically to point out some areas of risk that I seem, really kind of flourishing in today's trade. So kind of kick it off with, this is the S&P futures, and the S&P futures as a whole right now are up about 10 points in the day. Though they are far from their highs of the trading session, you can see the S&Ps right up here in your chart. We're all the way up to 2067. So we haven't just faded. We've completely reversed on what was an incredibly strong day in earlier trade. However, throughout the course of the trading day today, there are many signals of weakness. Okay, those signals came in the way of, and I've been harping on this for the last 3 days, but those signals came in the way of Facebook, Netflix, Google, Amazon. Okay, all four of these products have actually lagged in the day. Now, Facebook was actually up quite substantially earlier in trade. It faded with the rest of the market. However, if you took a look at Netflix, Google, Amazon, okay, most of these were weak throughout the course of the trading session. Yes, Google has continued to kind of fade on the trading day, which is down almost 0.5%. Now, 0.5% may not sound like a tremendous amount, but again, Google has not participated and was not participating when the S&P futures were up well over 20 points on the trading day. And again, then we take a look, of course, at Amazon, and there's a similar story going on in Amazon where couldn't get out of its own way earlier in trade and kind of continues to fade on the trading day. So as I said yesterday, and if you're not watching every day, tune in and turn on, there is the divergence in the force, and the force being these four underlyings have driven, okay, a huge amount of the S&P 500 returns year to date. And the S&P 500 returns year to date, what does that look like? The S&P is massively unchanged in the year and continues to kind of fade as trade has gone on today. Another area that if you're watching kind of intraday trade that has been, again, kind of expressing, right, that the markets are not nearly as strong as you may have anticipated, the volatility futures. So during these TheoVideo reports, it's not often I'm going to discuss a tremendous amount about intraday trade, but there were a lot of signals, okay, firing off today that markets could, in fact, see some weakness. One of those primary signals, though, came from the volatility futures. And when you start to see things like volatility futures, here are the /VX, they're up, okay, some 30 cents. The volatility futures are up and the market's up is unusual. But there was a point in the day where the volatility futures, okay, were only down 30 cents with the S&P futures up 23 points. Again, not often you're going to see that a major risk metric in the market was actually displaying, be cautious, be extremely cautious, I'm warning you. And yet at the same time, the S&P futures were up, again, well over 20 points. So there was this big catch-22 that you're ultimately caught in. Another area, again, if you're more comfortable, you could, of course, look at the VIX. Now, the VIX, okay, in my trading world, it's dead. The volatility futures are what are here, are what are now. Let's go a little bit deeper into the volatility futures. So if we take a look at volatility futures here on Thinkorswim, and we're not just going to look at the current or what we call active contract. We're going to open up a multitude, okay, of different expirations of the volatility futures. The ones that matter, okay, are the primary or the monthly volatility futures. Here we actually see the DEES volatility futures 1922 with 6 days remaining over there, okay, up 22 cents. As you go slightly further out in time, you'll also see the 41-day volatility futures, which again are up some 4 cents. So unusual in all the sense of volatility futures, no matter what expiration you're looking at, these vol futures, okay, have been elevated ultimately with what? With the market also being up, which is, again, kind of, contrary to what you would typically see. Typically, when you see the S&P is up 20, 25 points, you see the volatility futures down like a full point. It's kind of been tipping its hat all day towards, hey, could there be some selling pressure coming in later in the trading day? And that is precisely what we have seen. Specifically, again, you got to look at Netflix, got to look at Google, got to look at Amazon, as they're coming into the last 5 minutes of the trading day here, seeing continued weakness. This could be kind of the tipping points for markets right now. If you've been looking at markets, and I try to be as objective as possible, but if you've been looking at markets for as long as I have, there are, again, these divergences all over the place. That is, there's only this handful of stocks that's been holding the S&P 500 up. Finally now, we're seeing weakness in those stocks. In just the next few days, we have an FOMC announcement. Clearly, the order flow, that is the trades generated around the FOMC announcement, could be complete and total chaos. But prior to the FOMC announcement, we're already seeing a signal, okay, of kind of continued weakness towards the end of the year. And we're going to watch these 4 stocks like a hawk. Again, Facebook, Netflix, Google, Amazon, all seeing weakness today. That's really what's been driving the markets the last couple of days. Last but definitely not least, what would a day be without discussing oil? Oil down another 2% today. When will it end? Oil actually closing, okay, towards the lows of the trading session over here. The impact of oil is far more significant than most traders want to give it credit for. And the reason it's not just necessarily in the here and now, the reason oil is so important, okay, how much of the economy depends on these energy stocks, okay? And maybe we shouldn't look just specifically at oil. We can look at the entire energy sector over here. All right. So again, many of the ETFs, sector specific, we look at the entire energy sector, and on a year to date, on a percentage view year to date, and you guys know I love my percentage views, love like the year to date down 21%. What kind, again, of headwinds does that put on the entire economy when you have one of the largest sectors in the S&P 500 kind of being punished day in and day out? Again, we'll watch oil in the days to come over here, as well as, of course, Facebook, Netflix, Google, Amazon. That kind of divergence continues over here. If we see continued weakness, all right, very likely we're going to get that sell-off that people are looking for inside of the S&P 500. Thanks a lot, everybody, for joining me, Don Kaufman, over here at TheoTrade for the TheoVideo report.